Hi, this is the market outlook for the week starting Monday the 13th. It's been quite a roller coaster week. Actually, um, very much an up week, and then it fell. If we look at, maybe we should look at this one. As you can see, we've had a sell signal right on top here where we were when SPX was actually teasing with the all-time highs. They were previously around 29.40, and then it tested about, 28.60. On a daily basis, it's been drifting down, but this highlights actually a lot of entrenched volatility inside. As far as the sell signal, which is in bright red, is technically a strong one. You can see the histogram here is picking up, which means the correlation with the signal is stronger, which means that yes, we are definitely in a downtrend, and the first standard level, which sometimes is called the resilience level, bullish resilience level, was on 28.10. It's not exactly, it could be 2800 to 2820. And as a matter of fact, on Friday, it tested a low around 2825. I was expecting actually more downside pressure, but for some reason, towards the end of the day, the market picked up again. So the current resistance would be around 2900. And from then on, it could actually, if we plot a fib pattern from here, we would see probably that resistance would be around 2900, 2904, and then it could actually shoot up again to highs. This market is quite erratic, volatile, not exactly the easiest market around. So let's go back to the daily chart again, downward channel. And if we look at futures market, when it reopened last night, it was not exactly a short squeeze. This market went kind of berserk late in the day, and I'm glad we didn't really change our view on the current trades, because it actually fell with a gap of about 30, 40 points last night, and it's still drifting down. It could maybe test the lows again, which in my view have not been tested strongly enough on Friday. So we can anticipate more selling pressure for Monday and maybe Tuesday. Test this support level. So now if we look at, of course, this is only the resilience level, and considering the man market we've had since Christmas, the next daily support level is around 27.25. So there's still quite some room left for further down. Doesn't mean that this kind of volatility will not carry on. With possibly more seesaw movements all the way down to maybe 27.50. We'll see how it goes. For May, it's all right. For June, we'll have to look at 28.50 as a key level to maybe adjust, but we'll see that a bit later. A quick look at the Russell. The Russell, last week I said, well, this is a bit strange to see this market still hovering above the strong resistance, which would be a call for a test of the 1500 area, which has not actually occurred yet. But this is kind of strange, and if we look at strange level, I mean, yes, here we have the 1560 as a pivot level, which seems to be holding. And as I mentioned last week, the Russell is not looking as bearish as SPX. Maybe because if we look at a longer time frame, you will see that we were at 1610, 1620. We're still reasonably far from all-time highs. So as far as the Russell is concerned, 1500 would be a good support. Technically, it's more around a 1480, so it could be 1480 to 1500. It's not clear whether it's going to get there really, but clearly, if this level would break, we would probably go back to 1440 or even 1400 level, which could be pretty bad. So we can't say that this broad index will go into another route, which maybe will be more visible on tech stocks and maybe SPX. Lastly, a look at the VIX, completely flat. This is a very mild backwardation, with the market hesitating about where to go at these key levels, I would think that the market could, but May is so close that we actually need to look too deeply in that figure. I mean, there could be rollover with June going up and in accentuating some backwardation. June is a quarterly expiration, so a very important one. So there will be probably volatility being transferred to June more than July, and that will probably explain the incipient backwardation. As you can see, the market has been kind of strange. I mean, you can see the volatility gyrations very, very strong. For the uncertainty and nervousness of the market is itself quite erratic, which makes trading a little bit difficult. We will look at this in the next video, the market outlook. Bye for now.